Good afternoon, welcome to GrainTV. It's May 20th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down a very negative day in Chicago for the grains. Jumping into the quotes here, we see corn down 3 3/4, soybeans off 15.5 cents. We had Chicago wheat down 4. Cody, in today's action, soybeans was the big focus, printed a very large range, a lot of volatility. Break down the trade action that we saw there today.
Absolutely. You know, today we come down with a 15-cent loss, but yesterday we were relatively strong within the complex. What is interesting here, if you take a look at the 5-minute chart, you'll notice that we traded higher here very sharply off in the morning. We tested the highs that we printed back in early May. We broke out of those highs, but we were unable to stay above them. Now we turned around, we started trading back, and we closed out near the lows. This is typically, a failed breakout like this is typically a pretty bearish signal, but with the volatility in the soybean complex, I am nervous to say that this is a significant bearish signal, though it does typically play that role.
Right.
Now, one thing to note is that this is really an opportunity. When we saw this failed breakout, we wonder why is it that we failed the breakout. And this is an opportunity to look back over the charting landscape. One of the nice features on this Grain Hedge Standard platform is the ability to go back in time to look at a weekly chart and really get an understanding of where these major battlegrounds have been. Well, you'll notice that back in July and also back in last March, this 1255 area was a critical battleground. This is an area that we tested multiple times. We're unable to get above. Now, this is also an area, I mean, today we traded up to about 1257, but this is an area that we tested today and we failed to move higher. I'm not saying that this is the fundamental reason why we failed the breakout and why we saw the selling pressure today, but I do think that these critical price levels, these battlegrounds in the past, are important to pay attention to, especially when you're making trades, making trades around a breakout.
Yeah, absolutely, Cody. And even the great thing about this platform is that you don't even necessarily have to trade that price level. You can set a price alert so that it'll notify you on your mobile phone if these price targets are hit, and then at that point make a decision. So there's a lot of flexibility, a lot of power in a trading platform like this. Let's take a look and see what we saw here in the corn market today. We did see weakness out of the corn market, but not to the same degree that we saw for soybeans. Take a look here at the daily chart of the July 14 corn contract. You can see just generally a continuation of the selling here that we've observed for the last 3 or 4 days now. One thing that did help the corn market move lower in today's trade was a rumor that China was getting ready here to cancel all outstanding corn sales on the old crop in the next days and weeks here. And we were looking at that in the office here, kind of trying to evaluate if that would be a plausible scenario here moving forward for the Chinese. And one thing that we have noticed here over the last several months is that China has been importing a very large amount of sorghum relative to corn, and there could be a substitution effect there taking place. This chart here details the red line is weekly sorghum sales, the blue line is weekly corn sales. As you can see, in general here, we've seen net cancellations really since about March, but the really important thing here to notice is the correlation between the two. If you look at when we see very large sorghum sales, immediately following, we've seen very large corn cancellations, so it does look like there is some kind of substitution effect occurring here. I think that lends itself to the credibility of this claim that the Chinese could cancel these large old crop sales in the next couple days, and that would be a negative factor on corn. Outstanding old crop sales right now sit 32 million bushels. That represents 4% of total export expectations, so that would be a bearish factor. I don't think it's going to send the old crop market sharply lower, but bottom line here, looking at this, it is a plausible scenario that the Chinese could cancel some more corn here moving forward.
It is interesting when you look at the Chinese export sales for sorghum, and almost acts as a leading indicator here for corn. Now, Logan, you talk about these sort of substitutions, but what does this all mean for producers?
Well, I guess, as I said, I don't think that this would be an overly negative impact here on the old crop corn market, but I do think the real story to keep an eye on here is what it's doing to the U.S. basis environment. This isn't something that we talk about a lot here on GrainTV, but there's some important sorghum basis factors going on here in the domestic market that are important to take note of. Right here, this chart shows spot sorghum basis in St. Louis. The blue line is what we're seeing this year. The red line is the 3-year average, and it's clear that throughout the river system right now, there's exceptionally strong sorghum basis. There's a lot of incentive for grain merchandisers to move that milo, that sorghum downriver. So if you're a milo farmer and you typically sell to 1 or 2 elevators in your area, this year in particular, and given the purchases that we've seen from the Chinese, it could be of real benefit to look outside your local marketing environment, and we have a great tool to help you do that here at Grain Hedge. If you're interested in taking a look at that, visit us over at grainhedge.com or call the office 877-472-4607.
That sounds fair enough. Now, we are talking a little bit about topics that we don't typically cover, but if you have any questions about what you saw today, give us a call at 877-472-4607. We'd be happy to answer those questions, and you can take a demo at grainhedge.com. Thanks a lot for tuning in. We'll see you here tomorrow.